Hi, everybody. Chantal DeYoe with Chantal's Bookkeeping here. I want to talk to you some more about this thing called the chart of accounts. In our first video, we talked about the kind of the most basic parts of it, things that you own, things that you owe, money that you earn, and money that you spend. And, that kind of sounds very familiar to us individually as people. Um, and because, whether or not any of us have a business, we all have personal finances. But the same kind of thing applies to business. So whether you're looking at this from a personal perspective or a business perspective, this information can be helpful to you. And I'm trying to break it down into really simple terms because I know there's a lot of small business owners out there, people who have a passion for what they do, but they just really don't understand all this stuff around the dollars. And if you don't know how to track your money, it's hard to know if you're making money and hard to know if you're being a good steward of it. And so I just want to see if I can help with that a little bit. Now, I want to talk about a couple of other parts of this chart of accounts here. Because there are some other parts, and especially if you are a small business owner, you might want to know about that. So let's talk just a little bit more about some of these things. We talked about the stuff that we own being called assets. And there's different kinds. There's bank accounts and money that other people need to give us, and uh, things called current assets and things called fixed assets. We don't really need to worry right now about all the variations in here. Just to know that word asset means something that we own. Okay. And then we get into things that we owe. That's the word I like to use, kind of like the simpler word that we can talk about. But the professional word for that is liability. It's money that we owe. And there's different ones of those. There's bills that we have that we haven't paid yet. We talked about that last time. Like, for example, personally, maybe your utility bill. You could have a utility bill as a business as well. Credit cards, anything you spend on a credit card. And we're going to talk about that in particular in a minute because that's kind of an interesting topic. And then other things, maybe we owe some taxes, and maybe we've got some 30-year mortgages or something like that, long-term liabilities. There's another part that we did not talk about, and this is really only relevant for a business. It's not irrelevant personally, but we're not going to go into that level because most of us don't need to worry about equity when it comes to personal books. But equity is money that I, as a person, have put into my business. It's what part of that business that I have put money into. That's a very, very simple explanation. But we don't need to go any farther than that right now. Just to know that if I personally put money into my business, that's equity that I personally have in that business. Likewise, if I take money out, then that goes against my ownership of that business. We talked about income being money that we earn. We talked about expenses being money that we've spent. Now, there's another place where we spend money, and this one also is more relevant for businesses than it is for individuals, and that's cost of goods. It's an awful lot like an expense, but it's separate on the chart of accounts because sometimes we want to separate out the expenses of operating our business in general and making money in particular. And so what we do is we tend to put the expenses that are directly related to making money under cost of goods sold and the money that's related to operating our business down in expenses. Now, there's a lot of leeway and there's a lot of different thinking on that. Everybody always says, accounting is so cut and dried. It's just, put the numbers here and add them up and everything's good. But there's actually a lot of decision making that goes into how to decide where to put things. All right, so after the expenses, a couple more sections I want to talk about. There's this thing called other income. Now you're like, why do we have other income? Well, this is for really occasional one-off items, and it goes at the bottom of the list. We'll talk about that related to reports later. Same way with other expense. We've already got expenses. Why do we need other expenses? One-off things, miscellaneous stuff. We put it at the bottom so that it's there, but it's not cluttering up the main portion of our reporting that we do. That's all I'm going to say right now. In the next video, I'm going to get into talking about that credit card. So I hope you'll come back and join me again. Take care and have a great day. Bye.